Now, in tonight's class, I'm going to use the word security, but sometimes I might say a particular asset. I might say stocks, bonds, or commodities. I might say Bitcoin or cryptocurrency, but it just gets very boring saying security, security, security over and over again. So remember, I am trying just to make it interesting, but tonight what we're talking about works well in every market that we're trading. Also, I'll intermix the terms investing and trading. Now, most of us are here tonight because we're interested in trading Forex or CFDs, which is short-term trading, not really investing. Investors take a longer-term position. But the concepts we're looking at tonight work in either market, but I'm just intermixing the terms investing and trading to make it more interesting for us. Now, Bollinger Bands falls in the field of technical analysis. And a lot of us want technical analysis to answer some questions. You think it should say, should I buy today? What will the prices be later today, tomorrow, next week, next year, or in 15 minutes from now? So wouldn't investing and trading be easy if we knew the answers to these seemingly simple questions? But I don't have a Ouija board or a crystal ball. So alas, if you're attending this class in the hopes that technical analysis has the answers to these questions, I'm afraid I have to disappoint you earlier. It doesn't. However, if you're attending this webinar with the hope that technical analysis will improve your investing, I have good news for you. It sure will do that. Now, a couple things I want to point out to you is if you look on your screen, you can see I've uploaded 2 handouts. These handouts are just for you in tonight's live class. Okay. Please click on the download button, download them to whatever device you're using, because they're not available in any other format or any other time. So if you don't download them and save them right now, you won't have access to them. Also tonight, I may share with you some prepared presentations. If you wish to see these prepared presentations without going through the whole webinar, you can go to the link I just put up there for you and look under Bollinger Bands, and you can see these short little presentations that I prepared for you with PowerPoints, or I'm going to show them to you in class. But if you just want to get back to them again to see them, you can see them at that address. Now, Bollinger Bands were created by money manager and researcher John Bollinger. Now, one of the greatest things about Bollinger Bands is they've been around for 40 or 50 years, or 30 years, I think. But the fact is, John Bollinger is still with us, and he operates his site on Bollinger Bands, and you can go directly to the horse's mouth and get all the information you need about Bollinger Bands. Instead of looking to some guru out there that's trying to tell you what to do, you can actually go read about these right on John Bollinger's site and get everything directly from him. So there's abundance of information published on how to trade with Bollinger Bands, though much of it is discretionary. The how to use Bollinger Bands information usually pushes it back to the trader to interpret what the security price is doing relevant to its bands. So Bollinger Bands are one of the few indicators that are actually dropped directly on your price charts. And Bollinger Bands answers a very simple question. Are prices high or prices low? Now, there's all types of trading strategies that have been developed over time to apply the bands to more specific uses. But these bands consist of what's called an upper band and a lower band that are used what's called standard deviation. They are based on a 20-period moving average that is then calculated 2 standard deviations above and 2 standard deviations below, forming the upper band and the lower band. And it said everything and anything you need to know about price or making a trade is contained within these bands. So The nice thing about Bollinger Bands, it works good in all financial markets, and it works very well in short term as well as longer term. In fact, one of the best strategies that Bollinger offers, or John Bollinger, is to use longer periods to understand the environment, use medium-term periods to find whether you should be making a short or a long trade or a buy or a sell, and then use the shorter time frame bands to give you the entry and the exit points. So you can use Bollinger Bands in 3 different time frames and actually overlap them or use them to make all your trading decisions. Now, Bollinger Bands answers one question: are prices high or low on a relative basis? By definition, price is high at the upper band and price is low at the lower band. That bit of information is incredibly valuable. It is even more powerful if combined with other tools such as indicators for confirmation. So let me pop up a price chart here for us. Now, here we are looking at price. This is my standard teaching price, standard teaching chart. This is the current price for the euro US dollar. Not because I'm making any recommendations for you. This is the asset I teach from, period, the end. That's it. And we are not discussing what price is doing or whether you should be buying or selling this asset at this moment. We're teaching you how to apply Bollinger Bands. Now, we're going to do it step by step tonight, but believe me, you never have to do any calculations. All you do is go up to indicators and locate Bollinger Bands, click on them, and they'll drop it right on your charts for you. But we're going to do it step by step. So the first thing Bollinger Bands does, is you need to put a 20-period moving average on your chart, which is the gold line I just dropped on your chart, which is just a 20-period moving average. Okay, what's a moving average? Moving average, it takes the last 20, in this case, candlesticks or bars, and takes the close of that price for the last 20 periods, adds them together, divides it by 20, gives you the average, and puts a dot on your chart. It's a 20-period moving average. This is the basis of Bollinger Bands. Then Bollinger Bands adds the next 2 lines, which is the upper and the lower band, which are based on 2 standard deviations above and below the moving average. And it's based on the moving average. And this is what Bollinger Bands will look like on your chart. Now, you could set it with any colors you want. I've used these colors because hopefully they're easy for you to see on your screen in the webinar. But now we have Bollinger Bands on our chart. But before we can just blindly start trading from Bollinger Bands, we have to kind of get a handle on what this complex mathematical calculation that's called standard deviation, which forms this upper and the lower bands. Because this band and this band are basically all the Bollinger Bands is all about. Okay, so let's go back to my PowerPoint and let's get some explanations of what this standard deviation is. And then we'll never ever have to talk about it again. Oh, let me get my marker off here. So interesting, in the real world, no statistician would ever calculate standard deviation by hand. The calculations involved are somewhat complex, and the risk of making a mistake is extremely high. Also, the calculations are quite involved and very slow. So this is why statisticians, and standard deviation was not developed for the financial markets. Standard deviation is used by statisticians to calculate mean averages. Okay. So, but even an experienced statistician will always use a computer to crunch his numbers. He's not going to do it by hand. Now, standard deviation is a measure of the dispersion of a set of data from its mean. Mean also means moving average or average. It is calculated as the square root of the variance by determining the variation between each data point relative to the mean. In other words, it's the variance of each point on the 20-period moving average. If the data points are farther from the average, there is a higher deviation within the data set. In the simplest form, the mean is simply the average of all the data points in the given set. In investing, for example, you might want to know what the mean closing price was for the last 20 days. So this can be obtained by adding the closing prices for each session and dividing by 20 or the 20-period moving average. Okay. But that's just the bare beginnings because that's what standard deviation is based on. Okay. From there, it is the square root of that deviation, which is a very complex mathematical calculation. If any of us can ever do the calculations to figure out square root. Now, by default, we use a 2-period standard deviation. So now we have the upper band, the lower band, and the moving average band. So the base middle band is the 20 base, or the middle band is the 20-period moving average. The upper band is spread above the moving average by a volatility of 2 standard deviations. And the lower band is the same volatility measure below. One's a +2 standard deviations and one's the minus. So we end up with the upper band, the lower band, and the middle band, which is the moving average. That's it. Okay, we'll never talk about standard deviation again. Okay, we have an upper band and a lower band. Now, Bollinger Bands, okay, now we have them on our chart. Simple. Okay, easy. No calculations ever done again. We just click on the Bollinger Band indicator on our charts, and it's up there for us. Now, Bollinger Bands gives us 3 primary uses. One, it gives us pattern identification. It helps us recognize double tops, head and shoulders, and double bottoms. It also gives us reversal signals, and it will help identify early signs of reversal. And it also gives us trend analysis. It'll help us to detect when a trend is continuing or ending. So we have 3 stories, 3 multi-purpose uses of these bands. So there are many ways to use Bollinger Bands, but it's important to note that when the price touches the upper band, that doesn't automatically mean sell. Similarly, if the price touches the lower band, that doesn't automatically mean buy. In fact, take it from John Bollinger himself, who said, there is absolutely nothing about a tag of a band that in or of itself is a signal. But everything revolves around price and its relationship to the upper and the lower band. So prices can walk the band. During strong downtrends or uptrends, this means there are repeated instances of a price touching or breaking through the lower or the upper band. Okay, so let's go look at this on our chart where we dropped them on there. So when we get price riding that lower band, that's not a sell signal. Okay, when we get price riding the upper band, it's not a buy signal. What we're looking for is the relationship between price and its upper band. When we see price push up to the upper band and then staying on and then gets rejected off that upper band, okay, that starts giving us a sell signal. But we have other pieces of information we have to look at. We have to look at it in relationship to the moving average, because price will push up to this upper band and can get rejected off of it and bounce off, bounce off, bounce off. It doesn't actually become a sell signal until it breaks the moving average. So here we can see price pushed all the way up there. We can actually see the the high breaking that band, but it's rejecting. It can't make it. Falls back down, cannot make it back to the band. We get the sell signal after that when it breaks the moving average below. Okay. This is called here riding the bands. When price moves right on the band, it's riding or walking the bands. So what we're looking for a classic signal is the rejection of the upper band. When price tries to reach it, because price moving up should always be trying to reach that band. Here, it's the same thing. Price pushed up, the high couldn't get. Then we got 2, 3 other candles that still couldn't. Price keeps trying to reach that band and doesn't make it, but then finally gets rejected and pushed down. We don't get that sell signal until here. So it's not simply a buy or sell signal when it pushes through and comes down below. It's when price is rejected by that band. I just want to go back to the PowerPoint to continue on. Okay, then we also have what we call, we have price patterns. And what we look for in Bollinger Bands is a double bottom or double top, making the M or the M or the upside down M with W formation. So we call them double bottoms. So in other words, one of the most popular patterns that traders will look for when using Bollinger Bands is identification of M tops or W bottoms. They're typically viewed as strong reversal signals similar to double tops and double bottoms. The Bollinger Bands can be useful in identifying potential entry points for trades and even breakout opportunities. So what we look for is price is riding the band down and it forms a bottom. Okay. Doesn't tell us anything at this point. Just we have a first bottom. Price bounces off that bottom and moves towards the top. Again, it's still not telling us. This is just price moving up and down if we're looking for a price pattern. Price then gets rejected or doesn't get rejected, then reverses and comes down and forms the second bottom, which is equally distant or almost equal to the first bottom. Okay. At this point, we have what's called the N formation. Okay. And in N, we have an upside down and a right side up N. So this is a normal N. And then we have the upside down one, which goes this way. Okay. You get them the reverse if you're coming from a downtrend to an uptrend to a downtrend, or you're coming from an uptrend to a downtrend to an uptrend. Okay. So once we get the formation, the end, and this is when you'll visibly start to see it, we get the two bottoms of equal size, and so we have the N formation. But until it reverses and starts forming the W, we don't have anything. Okay. At this point, when it starts forming the W, we can then start looking for a buy signal. When it crosses the moving average, we then get a buy signal. If you've ever traded the head and shoulders on a regular price pattern, this is not a head and shoulders, but you'd understand the double bottoms, and when price breaks in a head and shoulders is when it breaks the neckline. Here it's when it breaks the moving average line that you're getting a buy signal. So this is a W bottom formation. And we have the opposite, the M formation, when we're coming off of an uptrend to a downtrend. So in the classic M top, the first high is touching or outside the upper band. And the reaction gets close to the middle band or the moving average. And then the second high is inside the upper band. And again, the second high can be higher or lower than the first. And the fact is the second high is within the upper band suggests that it's a lower high on a relative basis. And for many traders, the second high then signals a sell signal when it crosses that moving average line. So here we have the M formation, which is the exact opposite of the W, pushing up, making the first up, pushing down, pushing up, and then crossing the moving average and generating the sell signal. Now, you can have as defined rules as you wish. Okay, this isn't a sell signal that gives you an actual price. It tells you it's a sell alert. So some people use that the M and the W, the tops, the first one has to be within the band, the second one has to be a breakout. I use that they both have to be of almost equal height. So you'd look for the N formation, and then for when it starts forming that fourth leg is when you would get ready to do something, but you'd still wait for it to break the moving average. Now, we highly recommend combining Bollinger Bands with RSI indicator as just a perfect match. There are two types of tops that you need to know about. Okay, now, there's a 3 push to high top that often develops as a leading edge of a larger, longer topping formation. Typically, the way it forms is like this. The first push will make a new high outside the upper band. The second push will make a new high and touch the upper band. And the third push will make an upper high, but will not be within the upper band. This may be a reliable indicator of decreasing momentum. So here we can see on this chart, I'm sorry, let me get my marker back on here. First push high, falls back into the band. Second push high, at the edge of the band, comes down. Third push high, but the third push, it can't. Now we have a perfectly defined uptrend. Okay, staying above the moving average, push, ease, push, ease, push, ease. But this is telling us at this point that this trend is in trouble. So when we get this ease here, we're going to be expecting a reversal, not a continuation. So Bollinger Bands can also indicate the end of strong trends. Strong trends cause an expansion in volatility. Okay, now this is where people get a little bit confused. So let's go over to my chart. The width of the band and the shape of the bands don't really tell you much of anything. I've seen bands shaped like alligators. I've seen bands shaped like space aliens. I've seen bands that look like snakes. Okay, doesn't tell you anything. Now, the width of the band, though, tells you how volatile the markets are. The wider the band, the more volatile the market is. And that's an important piece of information. Because the more volatile the market, the more you'd have to set your risk-reward factor, because when a market is volatile, you need to set your stop losses much farther away than where you would set them normally. So understanding the volatility of the market, and one of the most unique trading strategies with Bollinger Bands is to look for the bands coming very close together, okay? And then you would look for a breakout strategy. When the bands get tight together, okay, and we happen not to have this in this current trading session, but when you see the bands congested and they're very, very narrow, you know sooner or later they're going to break upward or downward. Doesn't give us any directional clues, but when we see this long, narrow, not a snake, but a long, narrow piece of belt, we know that that market is going to break out of those bands. Let me see. Okay, here we can actually see Bollinger Bands applied in trading, but I don't see, and you can see here where we've looked for the formation. We see the peaks in the band, peak 1, peak 2, and they're marked on here, but I'm looking for that this asset, see how narrow the bands are here? Okay. We would expect price then to break out in one or the other directions. But when it breaks out of that band, okay, and that band starts getting wider, it gives us a very good selling indication. Here we have a beautiful riding the bands in a downtrend. So let me share a little presentation for you that's going to show you how you would use the bands for entry and stop loss points. Now, again, I popped up it'll be on your screen when you come back from this presentation, but it'll give you the YouTube channel where you can actually watch this at your convenience. So as you can see, almost everything and anything you need to understand and decide about an asset is contained within those bands. So actually, as you see here on this chart, which we just saw in the presentation, we can see price climbing down and riding the bands low. Prices then bounces off the outer band, tries to make that outer band again and is rejected, and then moves into an uptrend. Again, we get our signal to buy at the crossover of the moving average. Price moves up, isn't able to reach that band. It's not rejected yet. It's making, and it falls because it stays above the moving average, comes up again. It tries to reach that outer band, touches the outer band, falls back down, moves back up, but again, falls down, and then it tries to make it back up and is completely rejected here. Falls below that moving average, but comes back up again, and again is rejected. Now we know for sure we're moving into a downtrend. We get a sell signal right at the crossover here, and we ride the bands straight down. So we have everything from buy and sell to stop loss and take profit points all contained within these bands. So as you can see, Bollinger Bands can be useful by themselves. But remember, too, that they can also be combined with other indicators. Since they are a pure price indicator, you might want to consider combining them with volume indicators or for even more in-depth insight. Ultimately, there's no indicator that guarantees you always get at the bottom or the top. However, Bollinger Bands, especially when paired with other indicators, such as chart pattern recognition, can help you make better trading decisions. So remember, successful day trading is mostly a game of pennies. But there is a preciseness here using Bollinger Bands. And this preciseness can be used to your advantage. So I'm going to pop up a strategy. Now, I've given this all to you spelled out in that handout, the what's and the hows of Bollinger Band, but I'm going to pop up this one last simple, sweet strategy. Just watch the text on the bottom showing you exactly step by step what to do with this little short strategy. And again, all of this is explained in that handout. So if you download it, you'll have it all explained step by step. So the Bollinger Bands are a great indicator to use in any market. When you combine these with the RSI indicator, it should give you great entry points. Something else to consider is when the price touches the middle band, you can make a second entry to press your winners. This can potentially give you double your profits. With this strategy, we only use one trade that will make the initial move. But if your rules allow you to make multiple trades at a time with the same currency pair, then adding a second position at the middle line may be something you want to consider. So hopefully I gave you something to think about tonight. Bollinger Bands is a great tool because the other thing is it's dropped directly over price action. So instead of working on some indicator below your charts, you're actually interacting with the actual price. And that keeps you aware of all the price movements. So again, please make sure you download those handouts and copy the link I gave you to the presentations, and you'll be able to watch them at your convenience. Thank you very much. Thank you for supporting Legacy FX and investing.com. Have a great night now. Bye.